Home prices just hit a record high while inventory is surging and mortgage rates are shifting fast. If you think the housing market is crashing, this video will surprise you. Welcome back to the channel. Today we're diving into the latest housing market trends, covering inventory levels, mortgage interest rates, and expert forecasts for 2025 and beyond. If you're a buyer, seller, or just watching from the sidelines, this update is essential. Let's get started. Section 1. Housing inventory trends. Housing inventory is surging across the United States. While local conditions vary, the national picture is clear. Over 2 million homes are currently listed for sale, up 8% from 1.87 million just a year ago. Homes are also sitting longer, 43 days on market now versus 35 days last year. This slowdown is driven by high prices and elevated mortgage rates, which are discouraging both buyers and sellers. The result? A market that's cooling in pace but not in price. Here are the top 10 states with the largest year-over-year inventory increases. Rank 10, New Mexico, plus 31% increase in housing inventory. Rank 9, Washington, plus 32% increase in housing inventory. Rank 8, Virginia, plus 34% increase in housing inventory. Rank 7, South Dakota, plus 36% increase in housing inventory. Rank 6, Colorado, plus 36% increase in housing inventory. Rank 5, Arizona, plus 36% increase in housing inventory. Rank 4, California, plus 37% increase in housing inventory. Rank 3, North Carolina, plus 41% increase in housing inventory. Rank 2, Maryland, plus 48% increase in housing inventory. Rank 1, Nevada, plus 53% increase in housing inventory. Section 2. Home prices. Still rising inventory. Home prices haven't dropped. In fact, they're up 1.4% nationally compared to last year, even hitting record highs last month. Why? It's all about supply and demand. Fewer buyers, yes, but also fewer sellers, and an ongoing housing shortage. That said, prices are falling in some cities. Austin, down 4.9%. Miami, down 4.7%. Chicago, down 4.4%. Los Angeles and Denver also seeing modest declines, but these drops are from previously inflated highs, and affordability remains a major issue. L'Optimus is Section 3, Forecasts for 2025-2026. Vertelder Yuan. Here's what major institutions predict for home prices. Fannie Mae, plus 4.1%. Mortgage Bankers Association, plus 1.3%. National Association of Realtors, plus 3%. Torsor's Yuan. 2026 forecast. Fannie Mae, plus 2%. NAR, plus 4%. If you've been waiting for a crash since 2021, these projections suggest you may be waiting a bit longer. Section 4. Mortgage interest rates. The average 30-year fixed rate is currently 6.6%, trending downward. The Federal Reserve's next meeting is on September 17th, and market expectations are leaning heavily toward a rate cut. Here's the latest breakdown. 92.5% chance of a 0.25% rate cut. MISR's 7.5% chance of no change. MISR's 0% chance of a 0.5% cut. After recent inflation data. But remember, Fed Chair Jerome Powell may take a cautious approach. Even with market pressure, the Fed could delay cuts if inflation remains sticky. Section 5. What could impact rates further? Mortgage rates are tied to the 10-year Treasury yield. If the bond market weakens, yields could rise, pushing mortgage rates higher. So while a rate drop is possible, it's not guaranteed. In fact, rates could even increase in 2026, depending on broader economic conditions. Another key development, the U.S. government is considering releasing Fannie Mae and Freddie Mac from federal control. If privatized, mortgage rates could rise by up to 1% due to the loss of government backing. A hybrid model is being proposed to soften the impact. To sum it up, there's no housing market crash, but affordability remains a major challenge. Inventory is rising, prices are holding firm, and mortgage rates are in flux. With so many moving parts, 2026 is shaping up to be unpredictable. Stay tuned, I'll keep you updated as the situation evolves. Thanks for watching, and don't forget to subscribe for more housing market insights.